Okay, this is James and I'm back for another lesson. This one is specific to the homeowner's insurance when you're buying a house subject to. Now, this has been a sticking point. It's very confusing for a lot of people. Uh, I've never had an issue with homeowners insurance personally. I've never had a house burned down, been burglarized, or incurred some type of damage by natural disaster or whatever. So I've never had to use the homeowner's insurance on any of these properties personally, and I've never had anybody within my circle of influence, any of the other investors that have had to use it. But typically, what I would recommend doing in whatever area or locale you're in, check with the local RIA, and typically they have vendors that you know sell insurance, homeowners insurance, and work with investors. Check with them. Ask them if they're familiar with insurance for properties taking on owner finance. Because I can tell you what I do, and now how effective it is if an actual accident should occur, I can't guarantee because again, I've never had an issue personally where I had to make a claim on the homeowner's insurance. So I just want to put that out there. So just, whatever area you're in, whatever state you're in, check the local RIA, check the vendors, talk to any real estate agencies that are vendors, or talk to any local, investors that, do owner finance deals or subject to deals, and ask them who they use for insurance. Okay. And you'll be able to contact them and discuss options. But what I'm going to do next is just kind of go over what exactly I do and what your options are in this regard. Okay, typically you have, more or less two options when it comes to the homeowner's insurance. Because you can't leave it as is because it's showing the sellers as the insured people on the policy. Meaning if something were to happen to the house, they would get the check. And I don't imagine you want that to be the case, since technically you'll be the new owner, and the people residing in the house, depending upon how you structure it, they could be the owner or, tenant buyers. So you guys actually should, benefit if something were to happen. So what you want to do is maintain a good relationship with the seller and maintain an open line of communication with them, because you may need their assistance, at some point in the future. But you want to make sure you have your limited power of attorney, so if there's any instance in which you're going to need it, it's going to be with regards to insurance. Okay, so you want to have the sellers change the homeowner's policy to a landlord policy. Instead of an owner-occupant policy, you want them to switch it to a landlord policy, which is a non-occupant, owner-occupant property. You want to have them add you on as additionally insured. And if your new buyers are buying on a wraparound mortgage, which is financing, you want to have them on as additionally insured as well. So have them change it from an owner-occupant policy to a landlord policy, add you on as additionally insured, and this is, at your discretion, you can add the new buyers if they're buying via owner financing, not lease purchase, but owner financing, add them on as additionally insured as well. The second option is to have your new buyer, if they're buying via owner finance, to buy their own policy on the property, and it's perfectly fine because they're on a wrap. However, that could trigger the due on sale clause with the existing financing, the underlying mortgage. So you got to kind of be careful with that. That's something that I was starting to have my new buyers do, get their own homeowners insurance policy, but I've stopped doing that. Now it's just easier and cleaner just to have the sellers change it to a landlord policy instead. Now, this is why you have to maintain, if at all possible, a good relationship with the sellers. I mean, if it's a you know, an awkward situation, or there's some unpleasantness or association with the sellers for some reason, it's going to make this a little more challenging. But, sometimes that can't be helped, because you're going to, occasionally run into people who, once you fix their problem, they feel they're being taken advantage of. But, you understand, if you're doing everything, correct way, and if you've given them full disclosure, there's no reason why you shouldn't benefit financially from helping them out, as well as helping out the buyers, because you're providing a service to both. So, but if at all possible, again, maintain a good relationship with the sellers, get them to go ahead, and usually I instruct them to do this pretty early in the conversation, right at closing. So, and have them switch it over to a policy. So that's how you cover the insurance. If you have any questions about it, please feel free to contact me. Either message me below the lesson or send me a quick email. I'll be happy to go over it with you. But it's not that big a deal. Some people make it out to be a bigger deal than what it is. But, you have a couple options. One I recommend more than the other. There's a lot of other information out there which I don't recommend listening to. And again, the best case is to speak with a vendor, an insurance company that deals with investors regularly, because they're able to keep up with any changes in the industry and adjustments you may have to make. So, try that first. And if you have any issues, or you can contact somebody locally.